Hey folks, and welcome to the Pipnotic Symposium for the 13th of July 2019 from the west coast of Jutland in Denmark. Um, I've been kind of traveling a lot these past couple of weeks, and I continue to do so until we head back to Bali. We'll be back in Bali on the 1st of August, and then things will continue as they have done. We kind of had a long break here, summer holidays for the kids and stuff, so kind of traveling around, visiting family and stuff. Today we're going to have a look at um, uh, doing an analysis. Eric was asking about how not to spend a lot of time in front of the charts, and while I am a full-time trader, um, that's kind of misleading because I'm not trading full time. Yes, it is the only thing that I do, but I'm not sitting in front of the computer for 8 hours a day. While sometimes I like to, because obviously I like programming software and stuff, the bit of computer time that is associated to trading is limited to max 2 hours a day. And 2 hours a day is actually quite a lot. I like to use no more than about 1 hour a day. Okay, and so this whole concept of being a full-time trader fascinates many people. But if you're aspiring to be a full-time trader, it requires a bit of a mentality shift, and the shift is going from a situation where you're selling your time to you are using less time to create value. And so even though you're sitting in front of the charts for 8 hours a day, 40 hours a week, it doesn't mean that you're going to be earning X number of dollars per hour. Some days you'll sit for an entire day in front of the charts, if that's what you choose to do, but you won't earn a penny, and maybe you'll even lose money. And so you're not going to get paid for sitting in front of the computer screen. You're going to get paid from taking trades that are profitable. And so this is kind of something that you're going to have to come to terms with. And it does take a little bit of getting used to, I think. For me, it took a long time. It took me about half a year once I quit my job to kind of get into the psychological groove of no longer selling my time. Um, but it's good. And obviously, I mean, once you've got it down, you're spending, let's say, 5 hours a week on trading, kind of longer term, if that's how you like to trade. Then you can use your time on other things that are meaningful. And for me, meaningful projects are developing software. I really like developing software and writing. And so these are the two things that I like to spend a lot of time on when I'm not doing trading. And so let's say I spend an hour or 2 hours max a day. I'm spending an additional maybe 3 or 4 hours when my kids are at school writing software and just writing literature. And so this is something that I wish to continue to do. And so it's important also that you have something else you can do, because if you're getting bored, then you're going to be firing off what my friend Lucas and I will refer to as dude trades, where you kind of think, oh, this looks good enough. I'm sitting here, I haven't earned money all morning. So he fires off a trade in hope that it'll work out. And you want to kind of get away from dude trades because they are doing nothing good for you. Number one, you're likely going to lose money. Number two, you're teaching yourself that it's okay to do stupid things. And do trades are stupid, and so you want to refrain from doing that. If you want to do trades, then you go to a demo account. If you want to take proper trades, when you do those on your live account, but you don't do reckless things on your live account. That's a no-no. Okay, so I mean, I want to spend no more than an hour a day trading. How do I do that? Well, it's pretty simple. It's really simple, as a matter of fact. Let me just drag this out here so I can see all these. This is the FX Pro platform. I'm testing them out. That whole thing about I see markets kind of moving everything to the seashells kind of made me a little bit nervous, and so I'm kind of entertaining at UK regulated brokers at the moment. So I'm trying to find something that's interesting. I think these guys, FX Pro, I don't know how good they are, but their spreads are quite expensive. So I'm kind of trying a few different platforms out and guys and stuff. Okay, so what I like to do is I have my multi-chart configuration. Normally I don't have this one here, and for the sake of simplicity, I will remove this one here. So I have 4 periods, okay, and this one here is my greater period time frame. You can use 3 time frames if you want. You can use 4, whatever you like. Let's use 3 to make it super simple. So here I have my monthly, here I have my weekly, and here I have my daily. Okay, and so this is telling you what's going on longer term. This is medium term, and this is my entry time frame. Okay, and this is a common methodology you'll see I think many people use. And the reason for doing that is that if you're looking at one time frame, well, you're not really paying attention, or rather you're not seeing, maybe you're paying attention but you're not seeing what is going on the monthly chart or the higher time frames, which is essentially where these major flows are going to be visible to you. So if you're on a small time frame and you're not aware of what's going on the big time frames, then you're kind of trading in the dark and exposing yourself to additional risk which we essentially want to avoid. And so I like to have 3 or 4 time frames. Normally I have 4, but we'll do for 3 just to keep it super simple. You can even use 2. It depends on how you like to trade. But if I look at this, I can see that for this particular setup, you can see that we have the origins indicated. This is available in the chat room for free. You can just like find it, just search for origins in the Pipnotic room and you'll find it. Okay, and it just shows you swings, major swings, and major swing highs and lows that have or have not been violated. This one is orange, so it has not been violated. This one is gray, it's been violated. When I say violated, I mean that price has moved beyond it. So if we look at this chart alone, you can see that we have gray. All of these are gray here. What does that mean? That means that price has moved below these. And this is important because why? Let me tell you why. We have a low, we have a high. The origin of this move is here. This is a high. Okay, so each time price comes down and forms one of these, well, you don't want to be paying a price any more expensive than that. Okay, and so we have this one here. When price forms one of these, well, you want to be looking to buy at this level or below, when you obviously at properly formed supply or demand. Okay, and the same occurs here. You can see price has formed this here. Once price formed that, well, you don't want to be buying at a price any more expensive than the lows of this. Okay, so buying somewhere up in this price action here is a really bad idea. Okay, and so this just tells me where we have the deepest retracement so far. So we have a move from here to here. Price has gone here. What does that mean? Well, that means that price will probably move south again once it comes above this. So when you have these little dots showing up, it's simply telling you where you want to start to look to price. This is showing you the most expensive price to buy, and this is telling you the most the cheapest price at which to sell. Okay, good. Okay, so I have these in my chart, and you can see that for this little price structure, well, we have a few things going on. We have price that's getting pretty close to this. If we look at it, we probably reacted pretty close to the upper edge of this area excuse me, of demand. We didn't poke into it just yet. This was enough to cause price to move higher. To where? To this supply. Price reacted. We formed a very nice area of supply. And why is this nice? Well, it's nice because we had this little area of demand here that took out the highs here, traded above, price accumulated to do what? To drive prices lower, moving through this. So this is gone, and this is the area here that caused this area of demand to be taken out. If we look a little bit closer, you can see that we had the low of the accumulation. So this is the beginning of the buy zone. Okay, and this is important because on the smaller time frames, this will be a very clear pattern here. There would have been one of these below this little pullback here. So this is the beginning of the buy zone. Okay, what does that mean? That means parent, child. Price moved through the parent, through the child. They reacted at the parent, and we moved just above, and we sat and we started to accumulate on the area. What does that mean? Well, that means that we are looking to drive price lower. Price cut through. What area of supply took out this demand? This one did here. So we have a new area here. This is where you sell. Price tested it, almost, and then went down. And now price is moving around. What is it doing now? It's looking at the next buy zone, which is here. What's this? This is an orange dot on the smaller time frame. We had another one there, orange dot. We had a reaction. We had a reaction. This is where price is currently reacting. Where's it going to react next? Probably down here at the next one where we're going to have an orange dot. This is simply rally, accumulation, slingshot is pulled back. We can see by the wick, and then price release. We got a bit of a wick there, bit of a wick there, and we have a slightly smaller wick just here. So these are going to be price sensitive points in the future. Okay, what do we have above price? Well, we have this. Here we have supply. Price came down, it pulled up, slingshot, and it released. Okay, so this is the cheapest price that you want to sell at. Currently, we're reacting at this, and until we meet an opposing area to sell at, which is up here, we can buy. Once we reach that, then we sell until we get to the next one. So simply, I mean, you have these little price levels, you have these lows, and we have these highs, and you simply buy and sell between them. Rather, not between them, at them, not between them, but at them. And so you're not fiddling around in the middle, you're waiting for price to reach these clear turning points in the market. And what happened now? Well, price just reacted this one. What does that mean? Well, that means that we can probably expect the euro to move higher until it reaches another one, which is just around here. Okay, this is probably where we're going to see a bit of a resistance against price moving higher. Okay, what does that mean? That means that for the shorter term bias, we have an uptrend on the monthly chart. Okay, so now we go to the weekly chart. We do the same thing over. And here we have a closer look at what we were talking about. Here we have one of those orange dots. This is the one that we identified. I think, let me look. Yeah, this is the one that we identified on the other chart. This right here is the same as this right here. Okay, so we had slingshot was pulled back to there. Price almost came to it and it left. Price, we had another one below, which is here. Price came pretty close to it and then it left. Okay, we had this one here. Then it's kind of like a clear pull. You can also adjust origins to show us this. I like to see an intermediate. If you put, let's say, macro plus, that should be okay. We'll be seeing a little bit more. There we are. And you can see here that here's the next one. Price came close to it, and then it left. Okay, so these are really, really interesting areas. Okay, so you want to see, if you want to trade these, then you want to see very clear points like this. Okay, like price structures like that. You don't want to see really messy stuff. Like, you can pretty much trade all of them if they're clear, but you don't want to see like really messy stuff, like kind of stuff like in between here or in between here. You want to look for these very clear points. Okay, and these are visible via the origins, and this, by the way, is going to be refined and perfected, fingers crossed, in the next version that's coming out for MT5. It's going to be bundled as a part of the MT5 version, and I'm working on the MT5 version, and it is really, really cool. It's really, really good. Number one, it's going to run much faster. Number two, it's going to run much faster. And number three, it's going to really be amazing at qualifying very, very high areas of supply and demand. So I look so much forward to using that version. And I've actually started using it on the MT5 platform. As a matter of fact, I'm going to, I moved all my funds out of one of my existing brokers, and now I'm moving it over to a new account. I haven't decided which broker, but I will open an MT5 account, and I will trade it on the MT5. So I force myself to get acquainted with MT5 so that my development of the MT5 version of the Pipnotic supply and demand software will continue to develop nicely, and I hope to have that done sometime. But this stuff here will be standard in the MT5 version of the software. Good. So what do we have here? If you look at this, so we have an up bias on the monthly. What about the weekly? We can see that price reacted down here. Oops. Let me use this. Price reacted, to this one. So you kind of messed around, then it went up. And where do we have another one? We have the other one up there. Price reacted here. Okay, then we have another one that's just here. Price came down to this low, and now it reacted. It came up here. So the most recent area that it's reacting at is this one up here. Okay, so this one has formed. Price left. It came back. It tested it. It went up to this one. It came down, and now we seem to be kind of finding a bit of a base. What do we have below price? Well, let's go to the daily chart and have a look, because it's not very clear here what's going on. We can see, if we want to focus on market structure, we could do, for example, this. We have the clear swings, high, low, high, low. This connects nicely to there. Matter of fact, I'm going to connect this one like that. We'll do it like that. Like so. Oops. Like so. So if you look at that, let me change the settings here. Objects, single click. Thank you. And so we have this. And what's happened here? Well, we have market structure that's failed. And you can see this very clearly because we've had prices, candles form above the trend line. And so the area of demand that caused this, where's my, I got to modify this, customized. So if you want to add the rectangles, a drawing tool to your like the ribbon up here, right click on it, customize. You can scroll down till you find it, rectangle, and then insert. Okay, and now it's here. Cool. So you see that we have this one here. So price went up, it came down, we had a low. Where's the low? It's here. To the low, it's here. So it looks like this. Okay, so that's what we have right there. Price tested for a second time, and now we can expect maybe price to move off and away from that. So what's the bias on the weekly? It's to buy. So we have a long bias. This is a short-term bias because of the geopolitical stuff going on at the moment. So it's moving up on the monthly. On the weekly, we're going to be moving higher. We've just started to break higher. Okay. And on the daily, what do we have here? Well, we have a lot going on. We have this area of demand that's been tested. So you ask yourself, what's the most recent area that's been tested? It's demand, it's daily demand. So again, what are we going to expect? We're going to expect prices to move higher from this. Okay, so we have a short-term long bias for the euro US dollar. Now what? Then this is when I'll add in like another time frame. Okay, so I'll put this one on the monthly, weekly, daily, 4 hour. I want to see what's going on in the 4 hour. So now I'll say, okay, I want to buy. Where do I buy? So you look at a smaller time frame. We can do it on the daily and say, okay, where would we buy? Well, right now we can't really see where we would buy. This was the trade, but we missed the trade, and so what would we do? Well, essentially we want to find another area of demand. And we have a child here, but I wouldn't pay a price any more expensive than the lows here for a future trade until we have a clean, fresh area of demand that has been formed. And right now we don't have that. And so in order for that to happen, I want price to consume this here. And until it does that, we have to look lower to buy because we have not found enough buying pressure to remove this. Okay, if this one wasn't good enough, then we're going to have to look at the most recent test and lower to attract the buyers that are going to be required to push price through this area of supply. Okay, so that's what we're looking for there. So that's what I'll wait. And so right now on the euro US dollar, there's nothing to do, and so I'll do nothing. I'll sit and then I'll wait patiently until something else happens. Okay, so let's have a look at another one. So I've got my multiple time frames: monthly, weekly, daily, 4 hour. And I have also another indicator here called Pipnotic period changer, and this is also in the chat room. So all you have to do is search for period changer, and you'll get this indicator. And there are no settings on this indicator. There's nothing at all. All you do is you attach it to the chart, and what it does is when you drag an instrument onto the chart on which the indicator is attached, it'll just change all of the other charts to the same symbol. So if I drag the pound onto here, these three charts are updated to show the pound as well. Okay, let's have a look here. What do we have here? Well, we have this is a monthly chart. We had sideways price movement here. We had some demand here, which was tested quite a few times. It's gone. The area of supply that did it is this one. Okay, right there. Price tested it, now it's going down. What does that mean? Well, that means until we get to the low, this low here, we have a short bias. When price comes back down here, below here, well, we're probably going to see interest in the pound American dollar. Okay, but we don't see that, and I don't have any data on from my terminal to see anything else. And so until price moves below this, there's nothing to do. There's nothing to do in here. There's no demand in here. This is a reaction to the demand which is down here. And if we zoom in, where did we have some? Well, we had some here. Here we have an X. This is where an area of monthly demand was formed. Price tested the edge of it and moved higher. Now it keeps moving. You can see it keeps moving higher. So it keeps moving lower because it did not attract enough buying. So price is going to continue to move lower. So we have a short bias on the pound American dollar. Go to the weekly chart. What's going on there? Well, here we have our short bias. So we want to find supply at which to sell. You can see here we do the exact same thing as before. We want to look for those sharp pulls away. We have one there. Matter of fact, I'll use a rectangle. We have this here, which is reacting to this kind of pin here, you can see. So this is where we would want to look. Oh, come on. We want to look to sell. Fresh. Just here, the 13200 area. Because this is where price reacted. The slingshot was pulled back to the edge of this area and then it left. You could maybe look to sell in here. This is going to be a smaller time frame trade, so there's probably going to be something in here. And just for fun, let's have a look at what that might be. Let's go to the 4-hour chart. Where is it? Okay, it's here. So you can see here. So you can see that price came down, it went up, and then it left. So we're probably marking off an area that looks something like that. Okay, this is where price came down before it left, and it hasn't been back. Price has been back to this one. Price has not been back to this one. So this is the next one that we want to look to trade at. Okay, go back to the weekly. That's again shorter term. Well, we're focusing on longer term. So I want to see the major turning points, and I like this here. What I don't like about this is that price did not move past this low here, so this is still orange. So that means that we attracted just enough buyers to kind of hold price, support price for the time being. So I would be looking to buy below here. So if I mark that off and I draw it over here to here, you can see very nicely what it is that we're trying to accomplish, and that is we're trying to bring people down to here, okay, to this one here. So price, we moved down, we accumulated, we left, we came back, we tested the edge, and then we left. We're not there yet. Refresh. We're not there yet. So this is I would be looking to buy at here, and I'd be looking to sell up here. But this is where you would look to sell. Okay, this is kind of like a set and forget trade. But notice one thing that's super important. Has price been back to this price level before? Let me draw this. I can draw from here. Has price traded at these levels before? And you can see it has quite a lot. It's been trading in here. It's been here once, twice, 3 times, 4 times. It's been here quite a lot before. What does that mean? That means that this is reacting to supply. So the next question is, where is the supply? Well, you have to look higher. You have to look higher. This is a beginning, or this is kind of the early areas of a sell zone. Where do we have those? The slingshot. Where do we have a slingshot? I'm going to slowly move the mouse towards it. There it is, right there. This is where the slingshot was pulled back before it left. Okay? So this is, as a matter of fact, the better place to sell. So the entry would be no less than the high of the slingshot, and the entry, sorry, the stop would be above this area here. And if you want to get super precise, then you might want to go to the smaller time frames and look at what you can do. Why this one and why this one, and why not this or this? Well, it goes back to the, I suppose you can call it a rule, which is focus on the leg, rather focus on the price structure the current price is either standing on or hanging from. And here we have an origin, we have current low, the lowest low. So this is the only place that we want to look to sell. For this one, this is the only area we want to look to buy. That means you don't buy in here and you don't sell in any of these. You have to look, you don't sell any of this stuff here, you look to the price move here. You don't buy anywhere in here, you look to the leg the price is standing on, the price structure price is standing on, which is this here. This is pretty efficient trading. So there's no imbalances here. The only imbalance, the price has not yet revisited, or it has an origin of down here. The only one that price has not visited yet is here. So there's nothing to do at the moment until price gets down here for a buy or up here for a sell. Okay? And now, I mean, I'm using obviously a lot of time on explaining this. I mean, by now I would have been done with all of my pairs and I would have been kicking the ball with my son in the garden. So it doesn't take long. It just takes practice. But once you've practiced it many times, well, then you're good to go. Okay, it shouldn't take long. Go to the daily and have a look. What do we have going on here? Maybe it's even useful. As a matter of fact, we'll go to the 1 time frame. We'll go to the weekly. We'll markify areas. Come on. Here. That's the wrong one, isn't it? I was thinking, whoa. Have this. There. And we have, come on. I got my brother-in-law and his 2 girls on their way here, so I'm trying to do this as quick as I can. So we got that, okay? Good, so now we go to the daily chart, which is 1 less. Then you refine the entry. What do we have? Okay, this is really cool because we identified this as a really potentially interesting weekly area to sell at. Does it look okay here? It looks okay, but notice that the wicks are pretty big. What does that do? Well, that makes us think maybe this is a slingshot on a smaller time frame. So we'll mark it off. There's nothing in here. And we'll look and we'll see, was that a slingshot? And you can see, as a matter of fact, it certainly looked like one. You can see we have all of these wicks, and so you can see that in order for price to actually, the signs of the seller are not visible until we get to the high of this weekly supply. What we do have is we do have a little one here, and we have a nice one here. So if I had to choose between those two, I would do something like this. My entry would be where? It would be the high of the bar that left the area of accumulation. So my entry would be around there. Right, okay. Then I'm going to go back to the area of demand. I say, wow, look at that. Look at that. Well, you can see here very clearly we have the same kind of thing going on as before. We had, actually it was this one. Come on. This was the high. This is the pullback, the slingshot. But now look, you can see, wow, we have this area, but we can move it halfway through the area of demand. So this is now the area that I'll look to buy at. And this gives me the opportunity to move my stop a little bit below, so there's more space. And so now my entry went from up here to down here for a buy, and on the sell side it went from in this mess to up here. So now I feel really comfortable looking at these. Okay, so now we go to the 4-hour chart. Maybe you're happy on the daily chart, and that's fine. And again here you can see that this looks pretty choppy here, doesn't it? You can see how like this is price has rebalanced. You can see price came down, we formed this, we went down, we came back, we came down, we came a little bit higher. What does that mean? That means that the origin of this move is actually higher. It's here. Okay, and what I actually like more than this is this. I really like that right there. Why? Number one, it's closer to the origin of the entire move. Number two, this is a really nice continuation pattern. Price comes down, it chops around for a while. What does that look like? Can't really see here. It chops around for a while and then it cuts away. This is a very clear cutaway. This is also a clear cutaway. But I mean, price was driven higher to attract sellers. So I mean, it was a higher price was advertised at this area in an attempt to attract sellers. So it means that price had to go up to the highs here before it actually found sellers. You can see here, it went up there. Okay, we found some. It went up here. Okay, we found some. Then we had that signature departure, accumulation, then a dump. So here we found the highs of this one here. This is where we found some sellers. So there's probably going to be something going on in this area here. So you could look there for a shorter term trade once price gets there. Okay, cool. So that's what I'm doing. Let's do another one just for fun. Clear it all off like that. Oof, look at that. Let's do the Aussie US dollar. I'm in the middle of the country and there's no real internet, so everyone's hotspotting off my mobile phone, which is about to overheat and die. Right, so if we have a look at this one here, what's going on? We have the same kind of thing going on. We had, let's remove the rectangles because that kind of false. Okay, so we had, before price came down here, you can see that price was formed this low here. So are we buying here? No. Are we buying here? No. You can do. You can see price came down to this area, which is fine, and it worked out. But longer term, if we're looking for the monthly for our long-term trade, then we want to be trading in sync with that. Okay, so price came just past that. Let's have a look what price reacted in here. Let's go to the daily and have a look, see if we can see what it was that price found. I don't know if I have enough, the internet's good enough to get there. Let's have a look on the weekly, maybe we'll be able to find it here. Okay, so you can see that price in here, we had the nice area. It was a nice pullback. This is where price came to. I suppose we can't see anything else, so we'll assume that this was the area that price came back to. We have this, price rallies, slingshot. Poof, has price been back to it? No, it hasn't. The first test was here. Where did it come to? This is where price came to the first time. The second time, price reached a little bit deeper to here. And this is where it attracted enough buyers to do what? To hold price. So that means that we've advertised a lower price. We've engaged some people into the market. They have bought clearly. Okay, and now price is drifting higher. Okay, what does that mean? Well, that means short term we can expect price to wriggle a little bit higher until where? Well, until a place where we can see an opposing slingshot. So the slingshot was here, it went up. In this whole move down here, we don't want to pay a price any more expensive than the deepest retracement, which was this one here. Okay, price came down just beyond that, and now we've started to move higher. So we have short-term a long bias. Okay, so let's go in here and let's draw that. Okay, so let's draw that here from the low to the low. Here's the area. We'll remove this there. Let's have a look. What do we have above? Well, what do we have here? Well, we have, I hope this is jumping out at you already. We have this. Look at this. Is that a good area? No, it's not. Why? Because price has already been back to this level here. Bonk, 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 all around here. Where has price not been back to? You can see the price. This is kind of the only area that's kind of interesting so far. So we want to move this back up to here. Like that. Then you ask yourself the question, all right then, what about the quality checklist that we have? Is this a quality area of supply? No, it really isn't. And why isn't it? Because there's an awful lot of trading. There's so much accumulation. Something that I would notice is, where do we have a really nice release? We have a really nice release here. But this is here, you can see the price went up, gapped up, and then it left. And so I'd want to be looking high. I want to be looking above here, and certainly above all of this. So this would be the absolute low. And if you look here, notice that we have a bar that closed below most of these accumulation candles. The high of it is here. So we have this area here, but there's not a lot of protection for this here, and so I would be inclined to move it up to here. And price is reacting to this here. You can see, so this is already an expensive price that was advertised, so I would simply move it up to here. So this is where I would look for price to react. Okay, price moved away, came up, and it left, and it has not been back since. You can see very clearly that price has already been back to this level since price left here. So selling at a price any less than here for this time frame would not be advantageous. Advantageous, whatever. It could happen, and you can trade like that, and you can do very well. I'm just saying, when you're trading via discretionary methodology, you have to have guidelines to help you make the same or similar decision next time, or every time you look at a price chart. Okay, so this is what I think will attract some selling next time there. So you go to the small time frame, we want to refine those. Is this true? We want to ask ourselves, is this true? Okay, so you have a look. Let's look here further left, if we can find our rectangle. Just going to open up another trading platform, because maybe I have some data there. Give me a second. And you can see here that this area here, you can see that this is the buy zone. You can see that we could drop it down here, or we could in fact just drop it down here to the basis, this area. But notice that the price has traded this area here, here, and here, and here. And so I'd feel more inclined to move price down here, which again enables us to put our stop like that, okay? Because that's below all of this. There's no like real heavy hitting pushes away from here, but we do have one here. This is like a really nice heavy hitting push. You can see price came down, we left, we pulled back, and then we kind of wriggled higher, and we haven't been back since then. Okay, and so that's what we have there. This is the daily area. So let's go to the 4-hour. You can have a look. You can say, hey, you can see here's a little pullback. So you can have a look. You could move it up here, which is just above this high. Alternatively, you can say, has price been back to this area before? Well, yes, it has. It's been kind of wriggling around here. You can see that price traded here for a long period of time. But you could also say that this is actually like the greater period area of supply and price left, and this is the first attempt to come back to that area here. So I'm thinking that we're going to have a bit of a reaction there. But you can keep going down to the 1 hour, the 30 minute, and the 1 minute, whatever you like, and to continue to refine your entry. Okay, and I know it sounds like a bit of a never-ending game, but it shouldn't take you that long. Okay, it should go pretty quickly. So if you want to trade shorter term, I recommend that you're looking at the daily and your entries are on the, let's say, the 30-minute, for example. And so you should start your analysis here, and you should work your way down. Okay, so that's what I would certainly recommend for you to do. Good. Well, I better wrap things up. Before I do, I just want to show you the MT5 version. I'm not very far with this version yet. Let me move it on here so we can see it. Come on. I'm just working currently on the rectangle drawing functionality, and the code has been reduced so much since the MT4 version. It's really good, which is nice, and so it works very well. It's a lot. Is it even on this chart? Yeah. It's a lot faster than the other version, and there's a lot less code. And so I've removed probably 30% of the code and the manual rectangle drawing functionality, which is really cool. Another cool thing about MT5 are all these extra time frames, and you don't need all of those, obviously. I don't want to see like 2 minutes. Remove. I don't want 3 minutes, 4, 5 minutes is fine. 6 minutes. I don't want 10 minutes is fine. 12 minutes. I don't want 12 minutes. I don't want 20 minutes. And you have these other kind of hourly, weird hour offsets. Yeah, that's fine. We'll leave those. And so that's another cool thing about MT5 is that you have all of these different time frames that you can toy with, because this also enables you to kind of peek into the machine a little bit, kind of refine the areas just a little bit, which I think is pretty cool. Okay. So still pretty far from being done, but there is progress being made on the software, so that's all cool. All right, well, I'll leave it at that. If you have any questions, please send via the Discord channel, and either myself or one of the other guys will get to it. Thanks again. See you soon.